Right, back to business on the Business Breakfast. Stock exchanges across the region are demanding that companies be more transparent, and to tell us how and why they should do that, delighted to be joined in the studio by the Chairman of the Middle East Investor Relations Association, MacDonald, Vitale. Alex, good morning. Thanks for being with us.
Good morning, Richard. Thank you very much for inviting me.
I've been a business journalist for 20 years here in the Middle East, and since then, people have been telling me that companies need to be more transparent, there needs to be more disclosure. Why now, suddenly, have we got organisations like yours signing memorandums of understanding left, right and centre with pretty much every stock exchange in the region? Why is now this is an idea whose time has come?
So I would say it's really something that we've built up over the last 9 years. Middle East Investor Relations Society, as it used to be called, was set up here in Dubai by a group of international representatives of various different institutions, from banking to other financial services and other industries. And the idea was to try and ensure that we provided greater transparency, access and disclosure for international and regional and even local listed companies, investors, to listed companies as they were coming in and out of the region. And I think if you go back to pre-crisis, it was a time when there was a tremendous amount of foreign direct investment coming into the region, particularly in the UAE. And there was a real sense of a disconnect between the intentions of opening up that market and providing access to those investors and the positions that many of the companies then adopted with respect to their engagement with investors. Fast forward to today, we've gone through nearly 10 years of a recovery process since that downturn. And there's a genuine intention and I think expectation in the marketplace, certainly in the most developed countries around the world, to ensure that the investor community is serviced properly by those companies and their representatives.
Well, I know it's something that the big investors are talking about. I was at an event with a company you used to work at, HSBC, just a couple of weeks ago, all to do with Saudi Arabia getting the nod from MSCI, the index provider, that they're on watch to be promoted to emerging markets. They're not there yet, but the ball is rolling. And so obviously the big investors are looking at this market now much more closely. And investor relations was the thing that came up time and again from the big investors overseas. Some companies get it really, really right. For example, one of the organisations on that call was Savola in Saudi Arabia, food company. Their investor relations is brilliant. I mean, it's world class, but everyone admits that is perhaps the exception rather than the rule, not just for Saudi Arabia, but for the UAE and other Gulf markets.
I would say yes, that's true. In many respects, we've seen a significant increase, however, in the number of companies that are willing to subscribe to this standard, and we're the real reason for trying to now reinvigorate the relationship we have with the exchanges around the region is to provide them with the support, given that they are showing a tremendous amount of intention and willingness to adopt the standards and ensure that those standards now become consistent across the region, particularly in GCC. It is something that is an indication, I think, of a greater ability to now engage more broadly across the investor community and ensure that standard is becoming increasingly consistent.
I mean, because you've been in this region an awfully long time as a diplomat, working for a bank, now independent. I mean, you understand this culture very, very well. There isn't necessarily a culture of openness and transparency, is there? There is a culture of what's private is private and should be kept in private. So this is arguably, I hate the word, but a Western notion of disclosure, of transparency, doesn't always sit comfortably with business people here. I mean, we know, for example, prominent business people, they'll be chairman of a trading company, they'll sit on the board of directors of banks that are lending money to their own organisation. I mean, this is quite common here, and it served a lot of people very, very well. So having the lid lifted on that is tricky, Alex, isn't it? You know this.
It is, absolutely, and I think it's all about doing it the right way. So you go to a couple of really positive examples in the last few years. The UAE 4 or 5 years ago brought us in and said we need to ensure that we create a standard for our market here that is to the global benchmark. And ESCA, the overseeing regulatory authority for DFM and ADX,
that's the two stock exchanges.
Yes, thank you. And they set up a principal element to their existing corporate governance regulations that makes investor relations now a legal requirement for any listed company. Now, of course, the fast forward to the next question, which is, enforcement, and clearly that is a challenge in many respects because of the more internal view of how to manage what, in many respects, the representative companies see as this is our way of managing the company. This is not something we necessarily need to open up and reveal to the world at large. But the minute we then present to them a real understanding or a clear correlation between the access to capital and liquidity in the marketplace that they might need when their intention to grow is implemented, and their ability to then lower the rate of pricing, have better credibility within the marketplace, and the need to support that over time. It's not something you can do overnight. By building trust in the marketplace is something that they took to heart and actually have been doing tremendous amount of work in the last few years to promote and develop further. Saudi Arabia is a very good example of where you have great collaboration between the Capital Markets Authority and the stock exchange, and that's trickling down into an improved standard across the marketplace in general terms. As you quite rightly said, you've got some particularly strong examples, and there are many other companies that are still learning, but the rate with which that learning curve has now, I think, taken off is encouraging, and we're seeing more and more across certainly the GCC countries and more broadly the region, a willingness to now open up, but in a very structured and sustainable manner.
I'm wondering how much that willingness is needs-driven. Your brief to us says, as part of our mission, we actively collaborate with stock exchanges, top-listed companies and regulatory bodies in order to encourage them to share and adopt best practice techniques within the field of IR. And I would guess when we've had companies on this show over the last 12 years or so talking about investor relations and doing things right, it's nearly always been because they want to say and project the right message prior to going for an IPO. Is it unfair, do you think, to suggest that companies mainly pay lip service to IR when they want to impress investors, mainly prior to an IPO? Is that really what most companies do?
I think you could take that example anywhere in the world, actually. It's not just within this region, to a certain extent, but I think they're learning that doesn't really work, because you're not going to succeed in convincing a very sophisticated audience of investors now, which is increasingly international. You're looking at institutional investors as well. They're managing millions and or billions of dollars of funds, and their comparative approach to the way in which that company is performing and the manner in which they can communicate with that company is now put into stark relief given that broader focus that they have. I think the companies are realizing that they can't pay lip service to investor relations and or the general cultural shift towards a more open and accessible management team, and therefore creating an understanding of their company, as I say, over time, it is something that they realize pays off very negatively if they leave it to the last minute.
How many companies either that you deal with or in Dubai do you estimate would have a dedicated IR person or people?
It's still a relatively limited number. Interestingly enough, they actually have a function in most banks across the GCC, which is the share registry, which will often be a local representative that can manage the calls from other local shareholders who would be maybe calling in just for the AGM and or for their dividend. But that speaks to their ability to communicate externally. And in many respects, what we said to them is actually try and ramp up and develop that function, because you already have it in place, and provide them with comfort that it's actually a very structured approach.
Well, one thing I've struggled with as a journalist, and investor relations and public relations they're often close cousins, is finding out how much executives get paid and what shareholding of a company they have. A number of companies, I'm not going to name them now, but I've called up and said, how much did your chairman, chief executive, CFO get paid last year in salary, in stock options? How much of the company do they own? For international investors, employee compensation, senior management compensation is a big deal. And yet here, that's something that appears to be, in my experience, a red line that companies will not cross in terms of disclosure, because that is straying into private wealth rather than public wealth. But when you're the CEO of a public company, Those lines are blurred.
Yes, executive remuneration is a hot topic, particularly in the UK at the moment. It's been frontline news. I would also look at the structure of many shareholdings of a number of the local companies. So we still have a limited free float for international or regional investors to tap into here. So many of the shareholdings are actually in the hands of either family members or members connected to the origins of the company, or at the very least even government-related counterparts. And to a certain extent, their view is, well, once we've satisfied the needs of those shareholders, why do we need to consider the view or the perspective of the minority shareholder community? And that's the piece that we're all working on. And I would say that the willingness of the authorities to address that gap and try and find a way to provide the support needed to help the companies and the executives that represent them.
But we're running short of time, so let's get a crystal ball out. Maybe let's try and put a year on it. When are we going to be getting, as well as the quarterly results from companies like Maastricht Bank and National Bank of Fujairah that we're reporting today? When are we going to be getting their executive compensation numbers?
I don't have a crystal ball, but we're working as hard as we can, and hopefully all of the different elements that are coming together to support their intentions and their ability to deliver on this. I would hope within the next 2 to 5 years we'll start seeing some major changes in the right direction.
Alex, nice talking to you. Thanks for joining us, Chairman of the Middle East Investor Relations Association, Alex MacDonald Vitale.